Welcome back, traders and investors. We have April Rudin here of the Rudin Group. April, how you doing today?
I'm doing well. How are you doing, Joel?
Good. We've had a great show today. Two great guests, and we're sure you're going to make a third great guest today. So, give us a little background on what you're doing and your education, kind of like how you got to where you are today.
Well, it all began in Southfield, Michigan, pretty much, right near Benzinga's headquarters. I grew up in Detroit and began my career working for Kelly Services, the temporary help company, and began in technology and in marketing for many years. So I met Bill Gates 10 times in the 80s, and I like to tell people, he was my Mark Zuckerberg.
Okay.
So I've seen a lot of different things happen over the years in terms of technology and marketing. And as a matter of fact, in 1985, we had all of Kelly's larger branch offices with their own compact portable computer and a demo disc, which pretty much mimics a tablet and an app today. So that's where it all began. Wayne State University, Southfield, Michigan, and I ended up moving to New York around 20 years ago and continued in PR, media, and technology, and segued over into financial services because who cannot do that in New York City? And that's what brings me here today.
Okay.
I'm sort of a geeky girl. Let me just add, Joel. I mean, in terms of technology, some of my friends called me a man because I was an early adopter of even the BlackBerry. But I'll never forget the first day I heard the word Mashable.
Mashable. Okay. Why don't you explain that term to us?
So Mashable is a platform that really touts social media. So that was my first sort of segue to really use technology and in terms of marketing. And, I could immediately see the connection there. And for me, most financial services professionals were sort of the left brain quant type, and I was the right brain creative marketing type. And that mashup is really what led me to begin my firm 5 years ago.
Okay. And how does it differ? Working in the financial service industry, building integrated marketing. How does it differ from the other industries that you've worked in?
So it's quite different. Number one, financial services is pretty much a laggard industry. So if you just take a look at technology and social media and some of these other components, you see consumer brands, for example, Coke, Pepsi, really blowing the socks off of all of their digital and social strategies, and you see financial services really as a laggard. And I think it's for a couple of reasons. Number one, it has to do with the fact that, as I mentioned before, pretty much made up of left brain quants. So when it comes down to making a decision like should we buy a new printer, it comes down to when the printer breaks rather than some kind of technology spend that might help their marketing. No one's thinking should we buy a 3D printer and could we offer, really super cool reporting to our clients. They're thinking more about it from an expense side. Then there's the compliance issue, which for me is sort of, an excuse and overblown in financial services. So of course everyone knows compliance that works in financial services and knows what they're supposed to say and what they're not supposed to say to clients. So the offline thing is really pretty much the same, and I've called it green eggs and ham, Joel.
Yeah. Okay. Dr. Seuss.
Right? And meaning that, would you do it in a boat? Would you do it with a goat? Right? That's compliance.
That's
So
okay.
that's it. People who wouldn't be doing things not compliant offline wouldn't be doing things not compliant online.
Okay, you started this company in 2008, okay? And did you just, I mean, what a time to get started, in marketing and the financial services. And in retrospect, it was a great time to get started. I mean, was it something about the meltdown in the markets that made you get interested, or did you, from that perspective? Because that, I mean, if you think about it, 2008, that hop into this industry. I mean, it was incredible timing in retrospect. But how were you viewing the markets and getting started at that time?
So, of course, looking in the rearview mirror, hindsight is 100%, right?
Mm-hmm.
Yes, it was a time when the markets were, melting down, and really people were melting down, and I think people were looking for a new and different way of communicating and figuring out what was going on in terms of financial services. So I think it was, in retrospect, obviously a great time, and it was sort of a sideways move if you think about it, not, a front move. So I was really an early adopter in terms of some of these things that I've been talking about, and how can financial services firms, how can investors, how can everyone really utilize big data, technology, and some of the things that are available in financial services. So I'd like to say it was part of a great plan, and I might even say it was part of a great plan, but the truth is it was just sort of a timing thing. And when I began in 2008 and I talked to people about Twitter, they looked at me like I had 14 heads. So,
Okay.
yeah, I'm just sort of coming into my own now.
Okay, so you ended up focusing on ultra high net worth individuals and the high net worth segment of the population. Tongue twister there. How did you end up focusing on that group?
So, as a famous bank robber said, that's where the money is, right? So that's where we go. The truth is, for advisors and other financial services professionals, the idea of ultra high net worth and high net worth investors is really, amplified. So one new client or one new investor can really make the difference in terms of their year. So it's really a game of small numbers and really impact. So for hedge funds, for private equity, for anyone looking for investors, it's not a game of large numbers as it is in consumer products, just to sort of tie that back together. It's really more of a game of targeted marketing. And that's where social media, PR, media relations, branding and messaging, and some of the other activities I do really come together. So there's a misunderstanding and a perception in the market, I think, that ultra high net worth and high net worth investors aren't sort of quote unquote on the internet or quote unquote using social media. And of course, we know nothing could be further from the truth. Why? Because they can't afford a device, or because they're not smart enough to figure it out. So I found that to really have the most impact in financial services, both in terms of my clients and investors, in terms of bringing information, that would really be the best place to start. And that was probably one other thing I'd like to add about it, Joel. I don't know how much the listeners and how much you know about it, but everybody's first private banker that they knew was Mr. Drysdale. You know Mr. Drysdale?
From Bewitched.
No, Beverly
Close.
Oh,
Hillbillies,
Beverly
wasn't it?
Hillbillies.
Beverly
Okay.
Hillbillies,
Yeah. Okay,
exactly.
Joe. Joe lurking in the background.
You were around when the show was actually on the air,
Okay.
Joel. I mean, you
Okay.
were around when Lincoln was shot.
Oh, okay, Jethro.
No, I was around when Lincoln was shot, but that's okay.
Now,
Uh,
do you focus more on acquiring new clients or just helping them maintain their client base?
So there's a statistic that has been verified many times over, and it's sort of unbelievable, and that is that 98% of new wealth inheritors change advisors.
Hmm. That's interesting.
98%. So that means that when you're taking a look at your client base, should you spend your time trying to hold on to some of these older clients, the baby boomer clients, or should you really be focusing your marketing efforts in terms of gaining new clients, creating new campaigns, using technology, using social, using content, using big data to figure out where your clients really are. Um, so I would say that, the answer is different for different firms and for different clients, but it certainly isn't like it used to be. So, in the old Bernie Madoff days, one of the reasons why Bernie Madoff was so successful was because he really focused in on baby boomer clients.
And they were
And the way,
getting, yeah, there was the transition from wealth, and then they got it, and then here's this guy giving them, the Mr. T bill, 1% a month. So what you're saying is that he focused on these new baby boomers that were inheriting the money so he could pay off the other people for the revolving door. That's an interesting point. What forms of digital media do you utilize? I'm sure you use a lot of them. And are some forms of digital media more effective than others?
so it depends on who you're trying to target, and I would say that all forms of digital media are important, and that's something that people don't pay attention to. So, to go back to Joe's comment, when Lincoln was shot, when I first began my career, we used different platforms to create visibility in the marketplace. We used TV, we used billboard advertising, we had magazine ads, and all of those things have really gone by the wayside. So marketing is not so much a matter of one particular platform being better, quote unquote, than another. It's a question of having the same messaging repeated over and over again on all platforms. So some people will notice you, let's say, on LinkedIn. Other people might notice you on Twitter. Other people might find you via being sourced in a media interview. Other people might find you on YouTube. So the real secret sauce to marketing is having the same messaging and being in the same place, in all places, really, over and over again. So it's lather, rinse, and repeat.
Do you follow the stocks of the social media platforms that you use for your clients?
I do follow them, and, it makes me sort of laugh because after being in technology for so many years, I sometimes wonder in my mind, where are these old systems of long ago? Where is the Wang word processor? What is the value of any of these companies? For example, Apple. Believe it or not, I can tell you, in 20 years, your kids are going to say to you, "You had an iPhone? Ha 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 ha." That's not something we use anymore. So I think the most important thing for investors also to be aware of when they're looking at some of these stocks and whether things are bubbles is to take a look at where we've come from in the past. And sometimes I even point out, I know I'm big on TV shows today, but maybe Joe will fill you in. We had, in the olden days, we had the Flintstones and the Jetsons. So the Flintstones and the Jetsons pretty much had the same episodes. We lost the dog.
Right, right.
But the way they found the dog was different in the Flintstones episode versus the Jetsons episode. So if you think about it, hardware is really iterative. So, when you think about the value of some of these stocks, Facebook, for example, changed the way that we interact and the way that people see each other, right, and communicate. But Facebook itself as a platform, will that really exist? LinkedIn, all of these different platforms. I've seen, since my days of meeting Bill Gates back in the 80s, I've seen so many hardware, software companies come and go that I can only imagine that these are really just iterative, and the market will be ferreted out, and someday we'll just go to the April Rudin URL and find out everything we want to see there.
Okay.
So, right, posting on all of these different platforms. And the other thing is Apple certainly changed the way that we, look at things and the way that we interact. But now I see them as strictly being a hardware company with something we used to call in the 80s planned obsolescence, meaning that they would come out with new hardware and thought of themselves as a hardware company, and that's where their revenues came from. so that there was no longer innovation, but simply an upgrade.
So you
And the
sound like
upgrade, right?
you're kind of skeptical then on like the Facebooks and the Twitters and the LinkedIn's.
I'm totally skeptical about them because I
Okay.
think that, they're interesting and I'm excited with them, but I'm not sure about the real value there. Um, because if you take a look at history and you take a look at where these technology companies have come and gone, it makes sense that no one would be able to hold a leadership position, right? How can someone actually, any firm, be a leader and continue to innovate? It's really counterintuitive.
No, that's an excellent point. It just just to finish up here, do you have like different marketing tactics that vary on market conditions? I mean, we've had a really very steady grind north here for the last few years. Do you have a campaign where in your back pocket where if the markets became volatile or we do go into a bear market, do you have different strategies for that?
Well, I have different strategies based on my different clients. So because I focus it on ultra high net worth and high net worth client acquisition, the client base that I have varies from hedge funds, now due to the Jobs Act, to private equity, to wealth managers, RIAs, investment banking. So each one of those sectors are really impacted by the market. So based on the clients that I have, that's what it really comes down to. For myself, market neutral.
Okay. All right. We've had April Rudin, wealth market strategist of the Rudin Group. April, thanks for coming on and sharing your outlook on the social media and the services you provide your clients. Thanks again. Have a good day, and we hope to have you back on.
All right, thanks, and say hi to everyone in Michigan and especially Southfield for me. Thanks.
Okay. Thank you, April.
Bye, Joel.
Bye bye.